Hi, so I've already looked at Electronic Arts, Activision Blizzard, and Take-Two Interactive. So today, to finish this all off, I'm going to look at Nintendo. The most household name of them all, Nintendo has its origins in Japan, unlike the other companies. Now, Nintendo is actually quite different to those other companies that I've talked about because they're actually competing in the hardware space, not just the gaming space. So the competition is also against Microsoft's Xbox and Sony PlayStation. Now, I don't know a single person who hasn't played a Nintendo game before, and we all grew up with those great memories of playing Mario Kart or Pokemon. And because of this, we have a bit of an emotional attachment to the company rather than, say, a boring company like, I don't know, any of the insurance companies. So because of this, we don't want to let our emotions dictate our decision here, and we need to analyze the company properly. Oh, and hit that like button for me so I know that a few people actually got something out of this video. If you're new to my channel, well, welcome. My video is about investments that anyone in the world can make. And today I'm actually looking at my first Japanese company. So for all my Japanese viewers out there, garan itadaki arigatou gozaimasu. Now, like I said earlier, Nintendo are not just a gaming producer, but they're also a hardware producer too. And the hardware part of their business, think the Nintendo Switch console, makes up a large part of their revenue. Now, just like the other gaming companies, 2020 has been very good for Nintendo, with their sales actually surging 122% year on year. And that main console, the Nintendo Switch, well, it rose 43% year on year. And to go along with that Nintendo Switch console, Nintendo Switch software grew 123%. Nintendo did come out and say that the big growth that they are experiencing is pandemic related as more people are staying at home playing computer games. And one of their games, Animal Crossing in particular, well, it got a lot of momentum through the crisis because it was also used as a social platform. Now, there is a little short-term concern I can see is Nintendo are not releasing a new console this year, where both Sony and Microsoft are releasing new PlayStations and Xboxes. So that will obviously help those companies, especially with the lead up to Christmas, but I don't necessarily think this is going to be a problem for Nintendo at all. Now, the reason I don't think it's going to be a big issue is because Nintendo produces exclusive games that are made only for their hardware, and their top franchises include Mario, Zelda, Kirby, Smash Bros, Pokemon, and Animal Crossing. And these titles are just not available on PC or any of the other platforms. Therefore, the millions of people out there who want to play these games, well, they're going to have to buy that Switch console to go with it. The next point is the Nintendo Switch is a hybrid console. So that means it can be played both in the handheld version and on TV. Nintendo has actually cornered the handheld console market because the only competition they had was the Sony PS Vita, and that was discontinued last year. The Switch's hybrid style will actually attract a lot of gamers who want a handheld style rather than the Xbox and the PlayStation. And the third point is the Nintendo ecosystem is very sticky. And what I mean by sticky is once you play a Nintendo game and you fall in love with it or you've played it as a child, there is a bit of emotional attachment to that game and to Nintendo, and you really want to play it again. There are over 200 million Nintendo accounts worldwide, and its Switch online service now has 26 million subscribers. Now, turning to the expectations for next year, see, Nintendo have had such an amazing 2020 that they are expecting a decline in growth next year. This obviously makes a lot of sense as the world probably is going to return back to some sort of normality at some stage in 2021 or 2022. So those stay-at-home orders are probably not going to be as prominent. So a decline in growth from the epic 2020 results is probably inevitable. Now, we've already touched on that the competition in the space is strong, but I just think Nintendo have such good franchises that people just love and they want to keep playing. And don't forget, you do have to buy the hardware so you can play those famous games. Because of these reasons, I think the moat around Nintendo's business model is actually quite high. And even though Sony and Microsoft are releasing new models of their hardware, I think Nintendo are going to be totally fine. Look, like I've mentioned in my previous videos, I think the trends in the gaming industry are just not going to go away. And the trend is that the industry is going to continue to grow because technology is of course going to keep advancing. So my thesis around the industry is that as 5G technology continues to be rolled out across the world, well, more people are going to have access to high-speed internet. And with more powerful computing giving us better and better experiences, well, the gaming world is going to take advantage of this. I think it's one of the best industries in the world for the next 10 years, and I actually think it's probably one of the safest as well. So I think Nintendo's 200 million users and 26 million Switch accounts, I think that's going to just keep growing. And I think this gives Nintendo a lot of opportunities, whether they might go into in-game purchases or a subscription-based model. I'm not really sure, but the opportunities are there with that big customer base. And of course, they're great franchises like Mario Kart, which was super popular 20 years ago, and it's still just as popular as ever. And then think about Pokemon. Well, Pokemon was massive when I was about 10 years old, and it is still a massive franchise. Just imagine for a moment when virtual reality gets a lot better and we can run around Celadon City and live the Pokemon trainer's life. So like I said earlier, 2020 has been a massive year for all of the computer game companies. Nintendo is no different. So we want to go see if that's been factored into the share price. But before we get there, we need to have a look at their finances. Just so we don't have any confusion, Nintendo is actually listed on the Japanese stock exchange under the ticker symbol 7974. If you have a Saxo Trader Go account like me, well, you can actually buy directly off the Japanese stock exchange, and that's what I'd recommend doing. But if you don't have access to the Japanese stock market and you still want to invest in Nintendo, well, what you can do is you can purchase what's called an ADR. ADRs are a form of equity security that was created specifically to simplify foreign investing for American investors. An ADR is issued by an American bank or broker. It represents one or more shares of a foreign company stock held by that bank in the home stock market of the foreign company. So you might be able to purchase Nintendo shares through the ticker symbol NTDOY. So if you purchase an NTDOY share, well, that's going to represent 1/8 of the price of a 7974 Japanese stock exchange share of Nintendo. Look, honestly, it's not a big deal which one of these you buy because both of them, it's very easy to buy and sell. And it really depends on just what your brokerage account allows you to do. With any business, to check the financial health of the company, we want to look at these three areas. We want to see, can they handle their debt? Are they growing? And are they a well-managed company? Now, what I'm going to show you might get a little confused about the terminology that I'm using, but don't worry at all. Just sit back and just try to get a feel of what's happening. It's part art, it's part science anyway. So it's really important to look at the company's debt because a business pretty much can't go bankrupt if they don't have any debt. Debt is actually the big reason why companies get into trouble. So to see if the business can handle its debt, I go through the debt to equity ratio and the current ratio. Now, Nintendo actually has no long-term debt, therefore there's going to be no debt to equity ratio, which is actually perfect. And the current ratio for Nintendo is a 4.2. I normally want to see this above a 1.5. So look, they have no problems meeting their short-term liabilities, so that's great. We can move on. In the finances to check for growth, I want to look at the book value per share, the earnings per share, the operating cash, and the gross margins. Sure, 2020 is going to be a bit of an exceptional year, so I do want to think about this when I look at these charts. This is the book value per share, and as you can see, it's been solid growth since 2015, so that's good. This is Nintendo's earnings per share, and it's great growth since 2016 here. This is a bit of a theme for Nintendo as their financial performance really turned a corner in that 2016 period. I think it is because of the popularity of the Nintendo Switch. This is the cash generated from operating activities, and again, more growth since 2016 here, so that's good. Now, gross margins is something I've been focusing a lot more on lately. A company that can grow its gross margins is doing a lot of things right. Now, looking at the gross margins for Nintendo, when I compare those with Activision Blizzard or Electronic Arts, which are about 75%, well, Nintendo's don't look as good. But in saying that, I really shouldn't compare Nintendo with Electronic Arts and Activision Blizzard for gross margins because, well, they're not hardware producers and Nintendo is. And hardware just simply doesn't have anywhere near the high gross margins that software has. So I'm happy enough to give them a tick here, and as you can see, Nintendo have been riding a bit of a wave of success over the last few years. I don't know whether that's going to be able to continue or not. Although it'd be cool, we can't just go and sit in with the management team to make sure they're making good decisions. But there are some telltale signs in the financials that give us a clue whether they are making some good moves or not. So I'm going to check for the return on equity, the free cash flow, and the cash they have in the bank. So we're actually looking at Nintendo's return on tangible equity. It just means we've taken out the goodwill. So I want to see this above a 15, and it shows management are improving the value for the shareholders. Nintendo's return on tangible equity is about 17% and growing. Look, this is solid, but just as a comparison, Activision Blizzard was 77%. This is the cash that they have in the bank at the moment, and as you can see, it's been improving. That's great. This is the free cash flow for Nintendo, and as you can see, it's been great since 2016. But I would prefer to see a better history of free cash flow. Look, I'm happy enough to give them a tick here for management. I'm not blown away, but it's still a pass. Overall, pretty solid financials here from Nintendo. I would have liked to have seen better performance prior to 2016, but since 2016, we really can't fault them. Everything is trending in the right direction, and with a very positive industry outlook, I think the trend is going to continue. And I also really like that they have no debt. So it's going to come down to the valuation. So I'm using the intrinsic value calculator that I've put together, and if you want a copy for yourself, it's free and it's in the description. When I say intrinsic value, what I am talking about is based on the growth of the company and how much money the company makes. Intrinsic value is the correct share price today. Now, it's not perfect because we make a lot of assumptions of the growth rates, but it helps us get a bit of a ballpark figure. But of course, the stock market often overvalues or undervalues a company. So this is just one good approach to working out its value. So the data inputs that I've used for Nintendo are 8% growth rate for the first 5 years, then 7%. Now that's based on a little bit of what analysts think, plus what I think as well for the industry. Now I've used a discount rate at the moment, it's actually 8.5%, it just rounded up to 9%. The multiple I could sell it for, I've used as 18, that's the same as what I used for EA and Activision Blizzard. The operating cash flow minus maintenance capex, that's actually, I've just grabbed the free cash flow number here for Nintendo because that's easier to find. And the shares outstanding. Now it says that I want to buy it at $80.90. Now that's actually not true. That's actually what the price should be right now. That's what I would call intrinsic value. Now, to find the price that we want to buy it for right now, what I need to do is the discount rate, I need to change to 20% because that'll give us a fair margin of safety. So the price I want to buy it at is about $37. Let's just call it $40. So at $40, I think this would be a great buy. Now the numbers here I'm referring to are for the stock ticker NTDOY, but for those of you who are looking to buy 7974 on the Japanese stock exchange, well here are the numbers for you and it's in yen. So I would want to buy, well this is actually the intrinsic value again, so I've got it at about, call it 70,000 yen, and if I want to get a fair buy price, about 31, maybe 32,000 yen would be a good price for 7974 on the Japan stock exchange. Now this is just my estimations. Play around with the different growth rates. If you think things will be better than what I think and what the analysts think, well, just try higher growth rates. But in terms of a buy price, don't forget that margin of safety because we're making assumptions, there are errors here and you need to allow for those errors. Now the current share price for Nintendo as of early November is around about $68 for NTDOY and about 57,000 yen for 7974. So I do think Nintendo is under intrinsic value, just not enough for me to feel good about a margin of safety. It really needs about a 35% pullback from its current levels, and that's probably pretty unlikely. So do I want to invest in Nintendo? Now, like I've said, I'm not going to buy these today or probably anytime soon. I'm just going to put them onto my watch list because they are a great company. And from there, I'm just going to wait for a price that I'm willing to pay. And maybe that never actually happens, and that's okay. There are so many investments out there that have a really good margin of safety. I don't need to rush in to buy anything in particular. I do think the future is really bright for the company. They're in a great industry and their financials are really solid. I also just love the franchises that they have, and that's going to provide big opportunities for them over the next few decades. But in saying all that, I do think I like Electronic Arts and Activision Blizzard slightly better because they have better return on tangible equity, better gross margins, and I think I just like their industry a little better because they're not playing in the hardware game. Now, I'd love to hear your thoughts on this investment because I'm pretty sure a lot of people out there are going to think Nintendo is a great company and I should be buying it, and I'm just being far too conservative. Hit that like button for me if you enjoyed this analysis. Make sure you subscribe to my channel so you don't miss out on my future videos, and I will see you in that next video.